screen right now. Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, is with us. Rupen, good to have you on. Thanks so much for joining in. What's the sense? The market is moving from strength to strength, and that much talked about move, the shift from mid caps to large caps, maybe we're seeing some hint of that take shape now. What's your overall call on the market at this point?
Yeah, hi, afternoon, Surabhi. In last 1 month, the US Fed 50 bips rate cut has re-triggered the risk-on trade globally. And if I were to quote Warren Buffett, who's famously said that you always pay a high price for cherry consensus, and India seems to be a cherry consensus. So hence we are seeing this huge amount of interest in India. And while domestics have been big buyers in India of late, and particularly if I were to say after the rate cut, almost $4 to $5 billion of FPI money has also entered India. So it's now combination of both domestic as well as the FPI money. And as you rightly said, the FPI money essentially is getting into large caps and some bit of rotations. What I think two consensus trade amongst the investor community. One is large cap versus mid cap and financials vis-a-vis others. I think finally in last few weeks, at least we have seen some glimpse of that working through. So to sum it up, at this current moment, from the news flow perspective as well as liquidity perspective, market is in a good zone. But when, again, as I said, sounded a little bit cautious last time around when I was here, one has to be cognizant of valuations, and now valuations clearly are at 20 to 25% higher than the long period average. But in a market which is driven by liquidity, the valuations can go higher. So to answer your question, in the near term, probably there are no specific negative triggers that are there which can lead to a sharp fall in the market, but we should always be prepared for some corrections.
Okay, all right. Rupen, just hold on to that thought. Surabhi, at the start of the show, just a short while back, we mentioned that point, right? That if the markets can get past this 26,150, we'll be set for a flourish. It's a flourish indeed. Just take a look at that. We're up. We were at around 26,100 when we started the show. We have put on 120 points odd. And this is the expiry-related move that's playing out. And that's why we have select large cap names that are moving up. And the Nifty Bank as well is now up a good 300 points after it got past that 54,250 odd mark. Well, Rupen, always good to hear your thoughts. Let's talk about a couple of themes. Discretionary spends are likely to come back as India's per capita income itself starts moving up. And there are various ways to play it, right? One of the themes I'm looking at is, I think, luggage, QSR, and movie exhibition. Tell us more about this. And from the luggage space itself, would you go for the one that's been outperforming, or do you believe that still the leader, even despite of losing market share, which is VIP, still has potential from here on?
Okay, yeah, hi, Nigel. I would just break it up into two parts. One is what I would call low ticket consumer discretionary items. So what you mentioned are all low ticket consumer discretionary item. And that segment for last, say, 1.5 years have been significantly underperforming because the revenue growth has been tapered. A couple of reasons attributed to that. One, the rural India was not doing that well. The inflation was high. And now at this juncture, probably both of these factors are reversing. And to add to it, we are getting into a state election mode in which many states are going to go for election. And if I'm not mistaken, roughly the state governments have earmarked almost 100,000 crore towards welfare schemes and other stuff. So net-net, the point here is that more money will be available in the hands, and that low-ticket discretionary items which have struggled will come back. So all those factors which you mentioned will do well, be it the QSRs, be it also the movie exhibition, or for that matter even luggage. And to answer your question, probably usually what happens if there is one catalyst and some earnings which are not coming through, if that starts coming through, the leader which has underperformed can really have a decent comeback, because usually market also waits for these kind of opportunities wherein there is temporary problem which happens in a company which has over a long period of time demonstrated a decent track record, if one or two catalysts works through, I think that is in for some decent market performance.
Okay. By the way, just want to point out that aside of the technical factors here, local factors, which is expiry, the global setup is also looking very, very promising right now. Most of the markets in Europe are rallying anyway. Metal stocks and mining stocks are up and away. And another development that we should take note of is the fall in oil prices. Intraday, oil has dipped 2%. There are some reports out there, agencies are suggesting that Saudi Arabia is going to let go of its price target framework for oil. They were looking at $100. They could actually start looking at boosting output. And that obviously spells far more many barrels in the market, which is not great news for prices. And you're seeing that impact now. Look at that, 2.5% almost slide on some of the oil contracts out there. In addition, US futures, particularly NASDAQ futures, are up as much as 1.5% as we speak right now. 0.7% I think on the Dow and the NASDAQ, and the Dow and the S&P 500. NASDAQ is up 1.5%. One of the reasons behind that is Micron. Micron shares are surging almost 13-14% in the pre-open or the after-hours trading because of strong guidance that company has put up. So the whole semiconductor lot is very excited once again, which is why the NASDAQ futures are up about 1.5%. So again, we're looking at a very solid global backdrop as well. Rupen, speaking of semiconductor and new technology, obviously that's a area of very high interest here as well. It's renewables, then there is semiconductor. There's EV, but it depends on how you would want to play it and whether you're finding the right companies at the right price. How have you been looking at these new sunrise? I mean, no longer new, but obviously growth areas, sunrise areas, and how would you look at playing them?
In some of these sunrise sectors, unfortunately, there aren't many direct listed plays available, and majority of these plays are through the unlisted market. One of the themes which you mentioned, renewables, clearly, the focus, be it on the wind side, some of the players which we have liked, but unfortunately, the market always is, in the current zone, it is discounting next 3, 4, 5 years earnings. So at these junctures, some of the listed players who are a direct play on that theme are not available at a valuation which would, induce us to do a buy call out there. So we are tracking all of these, some of the direct plays which are there, but valuations currently are not palatable for us to pull the trigger. But at an overall big picture level, from a direct listed plays in some of these big themes which you mentioned, unfortunately not many plays are available in the listed space.
All right, Rupen, I wanted to ask you about the capital market plays. The street is getting ready. Maybe we could have another exchange that will be listing on the other exchange. There's NSE getting listed on BSE. But there is some word of caution. With Zerodha, they reported very good numbers. But Mr. Kamath says that don't expect these sort of numbers going ahead. And he's expecting some kind of a dip because of the regulations that have got tweaked, or there has been a bit of tightening out there. What's your view on the capital marketplace?
In fact, it's a pretty interesting question, Nigel. And here, amongst the capital market intermediaries, I will break up into two parts. One, companies in which majority of the earnings comes from transactional incomes, so which would be the brokerage firms, the exchanges, essentially in that. And the other in which, while transaction income is there, but a lot of income also comes from annuity. So some of the asset management companies, wealth managers will get into that. And, there are R&D players and all which will have a combination of the both. So in the current juncture, and I think very rightly, as Mr. Kamath of Zerodha said yesterday, we have to be cognizant of the fact that it is a cyclical industry. And in last 4 years, we have always seen a one cycle up. And I think their numbers also were quite mind-boggling, almost 5,000 odd crores of profit is what they reported. Here, considering, I think very rightly said, regulatory challenges which we are seeing, there can be impact on the overall volume. So some of the companies which have a direct correlation with the volume plays, definitely it makes sense to take some profits off the table, because what happens in market usually gives high valuation probably to peak earnings. I'm not saying these are peak earnings. That definitely there's a huge growth runway for growth, but in the intermediate period there can always be drawdowns. So at this juncture, probably preference would be more towards companies which have higher annuity business vis-a-vis companies which have high transactional income, because that can easily go down 30-40%.
Okay, all right, got it. Rupen, good talking to you today. Thank you very much for taking out the time and joining us. And we look forward to the next conversation as well. Okay, that's a view from Julius Baer coming in, and the market continues.